Welcome back. Stock market was up again today. That's good news for your 401k as we near the end of the calendar year. And Alan Lancz with us today. He's a nationally known investment advisor. Thanks for coming in. We've had you on several times already the last few months, and always enjoy talking money with you. The Santa Claus rally has really been great. The month of October was very bad, and then November started to kick into high gear, and December just continued that. And then, like when they announced, the Fed announcing they would probably be starting to raise or lower some rates next calendar year, it just took off.
Yeah, the nice thing, Dan, about the Santa Claus rally is it's really broadened out. We were negative on bonds until early November this year, and bonds have rallied in November and December. A lot of different stocks that had underperformed, like utilities, healthcare, financials, they've all, it's a great catch-up trade where they are outpacing the companies that were doing so well that kind of led the market most of 2023. They call them the Magnificent Seven of the Alphabets and Teslas and what have you of the world. So with this broadening out, it's really good because you're getting other companies involved, participating small, medium cap stocks, and it's going to help people's 401k because a lot of times they're diversified. If you were in bonds the last 3 years, you've lost money. So now is the time where, with interest rates going down, as you mentioned, bonds should do much better than they did the prior 3 years.
Technology has just totally dominated the market. You have your Amazons, your Microsofts, all your AI makers, chip makers. Those stocks continue to do well?
Yeah, but they're, as far as not going up as much as some of these others now that have underperformed, and that's what I mean by catch-up. So the tech, I think, will still do well, but those companies are so big, it's hard for them to continue to grow at the pace they were. So I think these other companies are going to play catch-up. They've underperformed for so long, and the values on these Microsofts and Apples are really high. So I think they're good companies. What's really a catalyst for them right now and why you're seeing this massive Santa Claus rally is AI. That's been a big factor in productivity, and you combine that with the Fed talking about lowering interest rates as early as March and 4 or 5 times next year, which again, I don't think will happen. I think if we lower interest rates that much, it's because they're worried about going into recession. So you have to be careful what you wish for, but enjoy the rally while it lasts, and I think it will continue to go up. Just momentum-wise, hitting new highs. The S&P is real close, so that should happen this week.
As we get closer to, as we're pushing toward greener energy, EV vehicles, things like that, what's going to happen with the oil companies? Are they trying to kind of go along with the revolution too and still satisfy their basic base of supplying oil and petroleum for our uses?
Yeah, they've been very interesting. They've underperformed this year. They're one of those areas, again, like financials, healthcare, utilities, that I think can do well for 2024. Basically, I think the green energy aspect is very difficult for some of these energy companies, and it's still going to be fossil fuels for longer than people might think, and I think that will help. But a lot of those companies are trending and getting more environmentally conscious for sure.
We have about a minute left, Alan. How do you see the economy going into 2024?
Well, there's a fine line as far as for a soft landing. So hopefully we lower interest rates enough where we don't re-engage inflation, but the market continues to do well. Right now the economy is doing fine. So as long as we don't as far as lower interest rates too much to kick back inflation, where then you're not going to have those cuts, I think there is a good chance that the markets could do well. Not as well as this year, but basically high single digits, low double digits.
And that would be good for the stock market.
Yeah, I think the stock market should do fine. We're down 19% 2022, up 25% this year. So a single 9, 10, 11% total return is favorable after that catch-up of the last 2 years, being back where we were 2 years ago.
Yeah, that's good news for the stock market. Good news for the 401ks.
Exactly.
Alan, thank you very much for coming in. Good to see you again. Happy New Year, by the way.